Good afternoon, friends, participants of the forum, distinguished viewers. Allow me to welcome you to the next discussion of our today's session. It's dedicated to inflation targeting in Russia. From the outset, let me introduce the participants. We have with us Alexei Zabotkin, Deputy Governor of the Bank of Russia, Artyom Pavlov, Treasury Head of Alpha Bank, and we also have people joining us online, Clemens Graf, Managing Director and Co-Head of Economics, Goldman Sachs, and Jacques-Alain Mignan, Head of the IMF Mission to Russia. Good afternoon. Allow me to thank you for joining our today's discussion. The topic at hand is of great import. It is becoming increasingly relevant right now because we're going to talk about inflation targeting in Russia and elsewhere. And this is an emblematic year because inflation targeting is celebrating its 5th anniversary this year in Russia. Over these last 5 years, the Bank of Russia has managed to achieve its goals with medical precision. Year on year, the inflation stood around 3.8%. Minimum, it was 2.2%. Right now, it's a little superior to 6% as of May this year. On the whole, it's all symmetrical, with regard to the goal. So let us talk about what comes next, how it has benefited the economy and how we can improve these tools. This is increasingly relevant because yesterday Madam Nabiullina announced the plans to conduct a monetary policy review in Russia. What does it mean? It's been 1 day since the plans were announced, and experts have many questions, though this is not just a strategic topic, it's also very relevant right now. Let us begin our discussion by taking stock. My first question goes to Mr. Mignan. As a global expert center, a key organization in that regard, what is your assessment of the Bank of Russia's success in inflation targeting of 4%? And how successful has this transition in Russia been to inflation targeting as compared to other countries that embraced the same policy?
Well, I absolutely think it's been a great thing for Russia. And the first thing I would like to say, I think very much so, the Bank of Russia has succeeded in its transition to inflation targeting, and it's really succeeded in pegging inflation very close to the target. As you know, when inflation was started, inflation was at double digits, yet it came down very, very quickly. And now it's been hovering around the 4% target very closely for several years. Sometimes a bit below, sometimes a bit above, but this is as it should be, because you cannot hit the target every single month. The key when you have inflation targeting is the feeling that when inflation is above the target, that it will come down in a reasonable time frame, and when it's below the target, likewise. And I very much believe that this is the case in Russia and that there is that confidence. So the question is, how did they do it? I think 2014 was very much a wake-up call for Russian policymakers. I think they realized they needed to really go all in and tame inflation, and they needed to go all in and increase confidence in the currency and in the banking system. And they did it. They were very, very decided. They went all in for it. I think they were very helped as well by a much better fiscal policy post 2014. So overall, I think it's been a great success. And by every metric, I think, Russia has brought down inflation successfully. And, it has really achieved a low inflation, a credible low inflation environment for Russia. So very much so. How it's done relative to other emerging markets. Well, inflation targeting has been a success in many emerging markets. We saw after the Asian crisis of the late 90s that many emerging markets adopted inflation targeting. Inflation came down pretty successfully in the 2000s. We saw this. Inflation volatility also came down. But not every EM was a success. Most were, but not everyone. And I'm glad to say that Russia, I think, is one of the successful cases so far. I think we're going to speak later on about the COVID crisis and inflation today. And I know that there are some concerns about inflation currently being a bit above target, but those are not major concerns that I share. But I'm sure we will discuss this later on. But I would like to say that historically, this has been very much a success. I think something important for Russia. I think my colleagues will speak later on about the benefits of low inflation. But let me say very quickly that people should not underestimate how important low inflation has been for Russia. It's not only the benefits of low inflation in that people can plan better, that people don't have their purchasing power eroded by inflation, but Russia today is a much less dollarized economy than it was even a few years back. And this is really important because we know that dollarization is a large source of fragility for emerging markets. And it's good that, Russia today is less dollarized than it was, several years ago. By the way, I use the term dollarized, not specifically about the US dollar, but about basically the presence and the importance of foreign currencies in the banking system and in the whole economic sphere. So overall, I think it's been a good success.
Thank you, Mr. Minyan. Yes, indeed, this is something that is not that often discussed when talking about the outcomes of inflation targeting in Russia, when talking about its successes. And if we look even further back, then we'll see that radical structural changes have been conducted in the Russian economy. Artyom, I have a question to you as a practicing financier. So what about this transition? How has it impacted on rates, on liquidity, on different segments of the market? What are the practical outcomes? I believe inflation targeting has brought about two results. One can be designated as something absolutely positive, and the other not so much. Let's begin with the positive outcomes. First and foremost, stability and predictability of how the situation is going to unfold, predictability with regard to how you will build your business. You have a comfortable environment and you can set the trajectory for your business development. You can build forecasts that are absolutely transparent and predictable. You can come up with new products, fully understanding that there is not going to be any shocks brought about by interest rate risks. You understand what the limits and thresholds are going to be. You understand that you will be able to be in compliance with regulatory requirements in terms of interest risk and liquidity and internal pacing. You can create new products, expand your product range. You don't need to all of a sudden make some reassessments, fearing that there are going to be unpredictable effects of inflation or currency rate changes. This creates a better market for money buyers, and as the Treasury, we find it very important if you know how your interest rate is going to develop, what the key rate policy of the regulator is going to be, and it's fully within its mandate, then it adds additional comfort to the market. You don't have any problems replenishing your liquidity reserves. You can also use long-term tools for funding, and these instruments are demand. When the inflation rate is steadily going down, you can choose investors who are going to invest in your securities.
Нам, как подразделению, так сказать, отвечающему именно за
Our Treasury Department is responsible for replenishing our balance, we find it very convenient, predictable, and transparent. So that's good. But there is negative influence too. There are some negative effects. Let's look at the other part of our balance. Against the backdrop of lowering key rates, we find it more difficult to place our resources, our assets, and the profitability of portfolios of securities is going down, the margin is going down. Why is it happening? When we target inflation, we understand that inflation rate has to go down. So it's not short-term rates that go down, but long-term rates that go down, and this curve straightens. Our goal was to make money based on this rate gap, but right now this gap is all but disappearing. And we have to understand how we can use the resources we can attract. And we run into some difficulties in managing the interest rate related risks. Moreover, when inflation goes down, when interest rates go down, it has an impact on our credit risk. Money becomes available to borrowers that in the past couldn't have even anticipated having access to these resources. There is zero rate, and the ceiling, it's very low too, and it does not represent the credit risk, and banks have to give money at such low rates due to high competition, and in order to prevent outflow of deposits, which is happening when interest rates go down, we also have to offer new products. Yes, of course, we try to give them the correct assessment, but sometimes the products for attracting investment are becoming too complicated, too complex when they are tied to derivatives, and they cannot be assessed precisely and accurately, and there are some unfortunate cases. Our clients do not always understand the risk they assume, and once these risks materialize, they have questions, of course. But globally, I would say these are two issues. On the one hand, there is stability, but at the same time, the business drive, as it were, is not there. It's very hard to push this development forward. You mostly spoke about the banking sector and the issues commercial organizations run into on the whole. My follow-up question, is as follows. We have seen the curve of profitability, very low rates, 4%, whereas long-term rates were at around 7%. They were also quite low. Right now, the curve is flattening, but I think it's absolutely natural, no? On the one hand, yes, but it was not always the case. When there is an aggressive awareness-raising campaign by the Bank of Russia that says that in order to achieve inflation targeting, it's going to decrease key rates. We had a very low gap between long and short rates, just 0.5%. As a treasurer, I am responsible for making money out of this gap between rates, and I see that I cannot do that simply because this gap between short-term and long-term rates, this gap has decreased significantly. So when drafting our budget, we often see that the margin is shrinking, not dramatically, but significantly, year in, year out, when the inflation is going down and when the interest rate is going down. Now, as for what we could do to address that, I don't know whether that is practical or not, but we can target not just the short-term rates, because, the key rate with a quotient of 1 can have impact on the money that is placed for 3 months or so, and afterwards it's becoming increasingly blurry and unpredictable. Maybe we could monitor all that, and the longer term we can monitor how the curve is going to behave. It does not mean that we want a guaranteed margin, but we would like to decrease risks where those risks are pointless. We shouldn't distort the perception of credit risks. Alexei, first I would like to ask the question addressed to Mr. Graf, and then I will get back to you. Mr. Graf, my question to you is about how successful inflation targeting how has it affected the Russian economy? You mostly analyzed the Russian economy, you studied what has been achieved through inflation targeting over the last 5 years, and maybe there are some negative side effects too.
Thank you very much, and thanks very much for having me today. So as Jack already said, right, I mean, the transition to inflation targeting in Russia came together with basically needing to disinflate. We had inflation well in the mid-teens when we started out, and so far away from the 4% target announced. So there is always going to be an initial cost, economic cost, to bringing inflation down. And that was, in our view, also the case in Russia, right? So if you look at the period 2015 to 2017, the 3 years maybe, we think growth was probably close to 5% lower cumulatively than it could have been otherwise. That's slightly more than what we see in other disinflation periods elsewhere. But obviously that's not all due to the disinflation, right? I mean, the economy obviously experienced at least 2 more shocks at that time. The oil prices fell obviously sharply in 2015. And there was a geopolitical shock that also had to be absorbed. But nevertheless, there was, in our view, a cost and setup cost, an initial cost to bring down inflation. And I think it's important to say that because this is an investment you've done, right? And it's something that you need to preserve and that you need to cherish, and you don't want to take any risk with, because you don't want to do it twice, right? Now, in terms of the benefits, it's hard to say yet, right? Because the period from when we had achieved 4% inflation more stably was obviously relatively short because then the COVID shock hit. So it's a little bit hard to really look at long-term benefits of the inflation targeting. I mean, you can look into academic research, and what you typically find is it's meaningful, in particular, if you maintain a lower volatility of the inflation rate, which typically comes with a lower average. There's a strong correlation between the two. And the benefits to growth could be anywhere between 0.5 and 2% and 1 percentage point a year, right? I mean, if you look at academic research, so you can recoup basically that initial cost very, very quickly. What we already know, I think, is that the inflation targeting, obviously together with the fiscal rule, has been fantastic in changing the way Russia reacts to shocks, right? And we just have to look at or remind ourselves of what happened in the global financial crisis and how monetary policy had to react and what happened last year, right? If you go back to 2007-8, we measure kind of the impact of the bank on financial conditions to something we call financial conditions index. If you look at that in 2007-8, you basically see the Central Bank of Russia basically massively had to tighten policy against a negative shock by around 16% in our view, and was actually not very able to reduce that hike very, very quickly. So it essentially had to add to the negative shock because of the way monetary policy had been set up and the credibility was not there. If you look at last year, yes, I mean, financial conditions also initially slightly tightened on impact because everybody is shocked, and obviously banks have to adjust and investors have to adjust. But it was minuscule compared to what happened in 2008. I mean, we think it was about 1.3% on impact, but then reversed very, very quickly with a 3 percentage point loosening of financial conditions. And so net, it was clearly a loosening, but in GFC, in the global financial crisis, they had to tighten, right? I mean, so you can now run monetary policy counter-cyclically. You can help stabilize the economy, something that you could never really do before, right? And that is a major benefit, and that we've all seen in the last year. There are obviously other benefits that we already see, and I think Artyom, on his positive side, also referred to those. I mean, it's much easier now to plan. It's much easier to give term financing. For the population, you see it in the mortgage market. The mortgage market has expanded very, very quickly. We now have almost doubled the share of mortgages in GDP. We can all argue about if this is too fast and basically leads to additional risk, and I understand the concern the central bank has there. But in principle, obviously, having a mortgage market that provides long-term funding to households to have a home is a major benefit, right? And there are other elements, right? I mean, like, I remember looking at my pension fund in 5-6 years ago and realizing that actually all the returns were negative in real terms, right? The pension funds were all having negative real returns. That's not the case anymore, right? I mean, people actually now have positive returns on their pension funds that they didn't have before. I can tell you that I'm sure there are a lot of people in Germany or in the US and elsewhere that would love to have those returns, but they can't. So there are clearly benefits that come from there as well, and that goes further in obviously the whole financial sector today is a very different landscape in Russia from what it was prior to the transition. We have people opening brokerage account, mutual funds basically coming out, lots of product basically being offered. And I mean, and I'm sure Jack would support that, right? I mean, we all know that this only happens if you have stable, low single-digit inflation. It was the same everywhere else, and we see the same benefits in Russia now, and it's a great achievement. So I can only applaud the central bank for what it has achieved, even though I'm typically quite critical on a narrow issue. But I mean, clearly they've done extremely well for the country.
Клеменс, у меня один вопрос. Ну, во-первых, да, действительно,
I have one
крайне важный урок.
additional question. Yes, this is a very good lesson, and we can see that the Russian economy is not unique. It doesn't need any specific methods of stimulation. No, it's in compliance with the general universal laws, and thank you for underlining how loosening monetary policy can be used to prevent counter-cyclical risks. I've looked at your forecasts for Russia made by Goldman Sachs, and right now these forecasts are far more positive than in the rest of the market. So why did you say at the very beginning that so far it's hard to say what the benefits are going to be in the long term? So where do these positive assessments come from?
Because I didn't want to advertise my forecast. No, I mean, we are significantly more positive both on growth and on the inflation outlook. I mean, on growth, I think we are actually for this year not too far away from the central bank. I mean, we have 4.3% growth for this year. I think the central bank, and Alex, you tell me if I'm wrong, but says about 4. So it's not that different anymore where we are. I think consensus is still far too negative. I mean, you saw the update today from Ministry of the Economy with 3.7% growth year on year for the first 5 months. So we feel quite good about where we are sitting there on the growth side. On the inflation side, clearly inflation has risen well above what we had expected, and I think we discussed that in a later in this, so I don't want to go into too much detail. But I mean, in general, our view is that the issue at the moment is actually not so much the current inflation. That's obviously bad, and it's bad for household income. It deflates household income, obviously. The issue is really more about inflation expectations. And what we see is that inflation expectations, if you go away from analysts, are not that well anchored, right? I mean, yes, I have an inflation forecast significantly below consensus. I do believe inflation will return to 3% next year. But even analysts basically are at 4%. So analysts basically believe that inflation is anchored at the target. But clearly, the households and enterprises are much more skeptical if we look at the surveys, and that basically just reminds us of that. That's why I say that as well, right? I mean, we are still early into inflation targeting, right? I mean, so we need to understand that. Yeah, economists, analysts, whatever, might have fully bought into it, but that's not yet true for the economy at large.
Климент, спасибо большое. Алексей. Мне кажется,
Thank you, Clement. I have a question to Alexei. I mean, a lot has been said already about inflation expectations. And what do you as central bank have to say as a result of those first 5 years? Well, I thank colleagues for joining us today, because it is indeed a very important discussion. To answer Artem's question, I want to comment Artem's comment, but I want to respond the second part of the discussion as regards what it is we could do in the future. But now let me focus on what we in the Bank of Russia think of the progress achieved over the past 5 years. Since 2017, inflation was around 4% as promised. And it's a twofold drop as compared to the growth we've seen in the period from 2010 to 2016. We went from, strong two-digit figures in the first decade of the 20th century, significantly down. And what Jacques mentioned is really important. And I want to stress that not only did inflation drop, but the range of fluctuation has reduced significantly. And it's natural. I mean, it's two sides of the same coin. This is exactly why low inflation is important, because high inflation cannot be stable. And since the year 2003 to 9, it was fluctuating by 8 percentage points. And in between 2010 to 2016, it fluctuated between 4 and 13%. Again, we understand the top spike had to do with the financial crisis of the year 2014-2015, which we have to take into consideration because it's an actual shock, it's an actual result of the monetary policy that was then in place. The range was 6%, from 4 to 10%, which is high. And since the year 2017, the range was about 4 points, which is between 2 and 6%, which is in line with the best international experience of countries that target inflation. If we look at the US over long term, the range of inflation was between 1 and 5%. So figures we see for Russia is very much correspond to what's happening globally. And although inflation is accelerating, we see that price instability is much higher than in previous periods. And talking about what we could have done better in the past, well, I think this is what we should discuss during future congresses, because like you said yesterday, the governor of the Bank of Russia announced that we're planning to do monetary policy review, what has been done over the past 5 years. That's going to be this first exercise of taking stock of what has been done. I mean, colleagues have been hinting for a while that maybe time has come to do this overview, and we were responding that, I mean, we haven't accumulated enough experience, and I think now we have. We've been targeting inflation for 5 years, and now is a good moment to take comprehensive stock of what has happened over those 5 years. What I want to stress is that the idea of this exercise is not to make any change. I mean, change might happen, but we're mostly interested in drawing conclusions and lessons and getting an objective picture of where we stand, taking stock of what we've done over the past 5 years. And it would be important to hear the general public and the expert community and learn from experience of other central banks that did some sorts of public hearings or general discussion, taking into account all pandemic-related restrictions, of course. And going back to the second part of this discussion, in response to comments that we've seen in the press since yesterday, like Governor Nabiullina has said, we will look into inflation figures, but we are not certain we will change our inflation targets as a result of this overview. It will very much depend on conclusions we draw. We're not certain we'll be changing inflation target, I want to stress it. But if we do, we're likely to lower our inflation target. And we'll get final results of this overview by the mid-next year, and all decisions will be taken, we'll look at the desired figure around 4%. So we're getting more questions from the audience, and I want to remind you that you can ask questions online. So the final question was whether you could consider raising inflation target, but you just answered that question. Artem, over to you. Did you get an answer to your question? Oh, but I promised to comment on his comment in the second part of the discussion. Right. So maybe now is the moment. Oh, no, let me rephrase it. Wait.
Достаточно ли понятно вам, в принципе, как формирует монетарную политику регулятор, насколько она
для вас предсказуема? Do you understand the rationale of the regulator when it's drafting monetary policy? Can you predict actions by the Bank of Russia? I mean, is the Bank of Russia predictable? We never complained. We understand the general policy of the regulator. I mean, the regulator has created additional transparency that allows us to work, and our pace of work speaks for itself. I mean, we'd never be able to act as promptly if the policy of the Bank of Russia was not clear or transparent. We like in particular that even when certain parameters change, and so far they haven't changed much, the target, inflation target, remains unchanged. I mean, they don't switch between different parameters. I mean, they stick to the same target, and it's an adequate, consistent, stable policy. And that's important because it creates predictable environment on the financial market, and it helps us clearly to streamline our business processes and pursue our general policy of our bank. As for the format, the Bank of Russia has been rather eloquent in informing us using all the latest trends. Are you referring to the publication of key rate forecasts? No, not exactly. I mean, they use certain methods. They have their ways of bringing their position across, conveying change of key rate great. But if you read press releases, if you read what analysts say or experts say, I mean, they read all the weak signals. And they find some elegant ways to interpret those weak decisions. Do you mean brooches that the governor's wearing at those press conferences? Yes, exactly, and this is what we enjoy very much. But let us get to more scientific ways. I mean, central bank is clearly responding to the response for more transparency. This year it started publishing information about key rate trajectory in line with macroeconomic scenarios. Do you find that format interesting? I mean, Bank of England has its practice, Federal Reserve has its practice, so what would you say? Well, I think it's a good practice. We like it more than what Federal Reserve does, because you have to build a model and try to guess based on certain indicators. But, I mean, I don't understand how members of regulators shape their opinions. Sometimes I think they poll analysts that give their opinion on what the regulator is likely to do. I mean, who impacts the regulator? Do they listen to all experts or certain experts? And I mean, who takes a decision? Is that the Federal Reserve, or are they just reading expert opinions and then act accordingly? I think a consolidated position of the Bank of Russia that they give in their forecasts is more robust and helps us better understand what to expect from the future, and is one of the tools which I find useful, because maybe as they publish their forecasts, that would, help keep the curve from going too far up or too far down, and would help to, on the other hand, prevent leveling the curve and reducing bank's margin. Thank you. Well, Clemens, I have a next question to you, which is basically the same question. April 23rd, 24th, you published your own research that contains a part that is dedicated to how you interpret this trajectory of rates. I mean, and now, 2 months later, do you think you interpreted the message of the central bank correctly? And also, going back to where you stopped in your previous comment, if you look at inflation trajectory of the past few months, how would you comment, having that in mind, how this mechanism, inflation targeting, works in Russia?
Yeah, you really don't want me to dodge that question, right? So let me try to answer it. So, I mean, our view on inflation in Russia has been different from that of the bank for quite some time. Generally, we have lower inflation targets and higher growth rates, which typically doesn't go together, right? I mean, you think higher growth should mean higher inflation, not so how do we come up with higher growth and lower inflation? Ultimately, that's basically our view on what the potential stable growth rate of Russia is, that is non-inflationary. And that's significantly higher than where the central bank and most of my competitors, and I think, Jack, tell me if I'm wrong, but the IMF actually estimates it. So we think Russia can actually grow somewhere between 2.5% and 3% consistently without creating any inflation pressures. And obviously, in the last 5 years, it has grown significantly less than that in average. Now, there are clearly potentially one-offs that basically reduce that, like last year, obviously COVID, no question. But I think the general experience for us coming into COVID was inflation, underlying inflation was generally falling and had basically reached levels well below the 4% target. I'm not critical of that, but I think that's our assessment. We kind of think that in the 2 years into COVID, or even 2.5 years into COVID, if you take out the VAT shock and one-offs that came from sharp sell-offs in the ruble, underlying inflation was around 3%, right? And in February last year, before COVID hit, it was obviously even lower, but we expected it to go back to 3% by the summer, and it didn't, right? It only went up to, I think, 3.6 or 3.7 by August, when on our models it should have been 4.5, given how much the ruble had sold off. So clearly, the initial reaction of inflation, and I think we should remember that, to the shock was actually lower than I think most of analysts had, including ourselves, had expected, given how much the ruble had sold off. Then obviously inflation started spiking up in the autumn, initially based in the food sector, but most recently also in the non-food sector, and clearly rising well above levels that we had been forecasting. I mean, we had forecasted, I think, a peak last summer of inflation of 5.2%, and today I think we're at 6.4%. So it's later than we had thought, and it's higher than we had thought. So clearly it has risen a lot more. The question is why, right? Now, I mean, one point is obviously to say is you look at the US CPI and it's 5%. Right. So, and the US inflation target is 2%. So the overshoot in Russia is actually smaller than in the US. I'm not trying to do a competition here, but I mean, there are obviously international factors that are partially to blame here, and Russia is not on its own here. When we look at this kind of more in detail, the problem is that...
Clemens, I'm sorry, we were starting to run out of time. So could you maybe sum it up a bit? I really apologize. It's interesting.
So very quickly. So our view is, if you look at service price inflation in Russia, it has hardly moved since February last year. There's hardly any change. If you look at non-food goods inflation in Russia, it has risen, but we think about 1.5% of that is an exchange rate pass-through. And so underlying non-food inflation might have overshot by 50 basis points a target or something like that. But we don't believe that there is actually domestic factors yet that actually have driven the inflation rate. And as these one-offs like the exchange rate pass-through and distortions from abroad dissipate, we think inflation will start falling very, very fast. Will probably only happen by Q4, but we stick to our view that basically by the end of it all, inflation will be back at 3% where we started before COVID, because we don't have the same kind of demand stimuluses that we have in some other countries that make people concerned about demand side inflation. We have much bigger buffers because there was a big output gap. And so we think inflation will actually go back to 3% by the middle of next year.
Спасибо большое, господин Ниньян. Тоже вопрос более короткий. Ну, во-первых, если у вас комментарии по поводу обзора монетарной политики, во-вторых, как вы в целом думаете...
I have a question to you. What about monetary policy review? Do you have any comments on that? And what about the forecast for the next 5 years? Do you think the situation will be the same, or will things get more difficult?
Well, first, on the review, of course, we don't have all the details. We haven't had much time to look into it. But just to react to something that the deputy governor said on the inflation target, which may or may not be revised, I want to say that our view very clearly is that the inflation target should not be lowered. Very quickly, I think the gains for the population from having 3% inflation versus 4% are minimal. But the losses from running out of conventional space to respond to negative shocks can be very large. And I think we saw in this crisis how beneficial it was for Russia to keep this conventional space. And obviously, the lower the target, the closer you are to the zero lower bound. So all in all, we would think, the rate should stay at 4%. There's a good saying in the States, which is, if it's not broke, don't fix it. And the 4% is not broke, so don't fix it. Now, on your question on the future, I think that's a great question. And let me say that things are going to be easier for the central bank and things are going to be harder. I know that people hate it when economists say on the one hand this, on the one hand that, but it's true. So it's going to be easier because today the central bank has a lot more credibility and experience on inflation targeting than it did 5 years ago. and inflation targeting is fundamentally a game of credibility. So that's on the positive. The negative or the difficulty is that, first of all, it is clear that there's been a global uptick in inflation. That's the first thing. The increase in inflation in Russia is not just in Russia. It's a global phenomenon, both in advanced and emerging economies. And so inflation is always a challenge for central banks. And that's, the period of low and stable inflations. For now, at least, there's been this up. The second thing is that there is a lot of uncertainty about the causes of this uptick and what matters for the central bank, how transitory or permanent this uptick is. The reality is there's a lot of uncertainty because a lot of things have changed because of COVID, and we fundamentally don't know for sure. We don't know if this is the result of temporary disruptions because of the pandemic, or there are more fundamental changes in consumption patterns, investment patterns, production patterns that are going to drive inflation higher, or whether there are now more permanent dynamics unleashed by, policy support. So I think there's a lot of uncertainty, and that never helps the task of a central bank. Let me say that we, at the fund, we are closer to the view of Goldman Sachs. We think that globally, this is more of a temporary increase than a permanent sustained increase, although, of course, there are risks of the latter. And we also think for Russia, we are not that concerned about, a permanent, shift up of inflation. It's not something that we are concerned about. But we also admit that fundamentally this is a judgment call, and we could be wrong. But fundamentally, I think things are going to be tougher for central banks because there is, this inflation challenge, and there's all these questions about the durability of this or not. Let me say again, for Russia, we are really confident that the central bank has things under control.
Спасибо вам большое за эту уверенность.
Thank you for this confidence. It's good to hear. Alexei, we only have 3 minutes to sum up, and I don't want to steal time from you. Comment on what you think is best. Well, 50 minutes for a session is not much time, so I'll be brief. I owe Artem a comment on his comment, but Artem commented on his comment himself already. A fundamental element of stabilizing the further end of the curve is confidence and trust towards monetary policy. And the main way of attaining this trust is bringing inflation back to target indicators, better explaining what we do to achieve these goals. So publishing forecast for key rate, we did it once, we hope we'll do it again, and hopefully by the time we meet for the next Congress, we'll be able to draw better conclusions of whether it's a good format, the one we chose. But generally speaking, stability in the long term is what makes inflation targeting a success, because it allows to finance long-term investment projects and also create market for long-term borrowing for the general public, what Clemens mentioned, mortgage market, etc. But to make all that operational, to make it easier for us to attain our inflation targets, it's important to anchor inflation expectations. A number of experts commented back in 2019 that this has been achieved, but the example of the past 12 months shows that unfortunately we've come a long way, but still inflation expectations after the shock we've been through in 2020 went to peak levels since 2017. I think now they're at the level of 2016, which is a dramatically different figure. Well, it's very much about how you measure, but we're not talking about methodology now. We're talking about relative figures, relative indicators rather than specific figures, because in all countries, I mean, measurements by statistical agencies differ from other types of measurements, but I understand that we're not there yet. So we're a lot to do to achieve low inflation and anchor inflation expectations, but I think the Bank of Russia is ready to take the challenge, and once we do the overview of the monetary policy, the conclusions we'll draw will help us make our monetary policy even stronger. We did not have time to talk about many topics that I think are very interesting and very relevant, so I think this conversation should continue. But I want to thank our participants and I want to thank our audience. Unfortunately, now is time to say goodbye, but I want to thank you all and all the best.
Thank you.